Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial secrets of big companies. And let me tell you, Semiconductor Incorporated has some interesting numbers this quarter. Get ready for a deep dive. Alright, let's get straight into it. Semiconductor Incorporated just dropped their quarterly report for the period ending the 30th of September 2025. This is where companies lay out their financial health and what is going on behind the scenes, and we are going to cut through the jargon to find the juicy bits before we dive in. Make sure you are subscribed to Corporate Decoder, and if you want to chat about these filings with a community of like-minded people, join our Discord, linked in the description below. Now, let's see what Semiconductor has been up to. First up, the balance sheet. Think of this as a snapshot of what the company owns and what it owes. As of the 30th of September 2025, Semiconductor reported total assets of a whopping $855 million. That is down from over $941 million at the end of 2024. A big chunk of that drop is in cash and cash equivalents, which went from around $274 million down to about $161 million. It looks like they've been spending money, which is not necessarily a bad thing, but it definitely means they used up some of their liquid funds. On the flip side, their total liabilities have decreased slightly from around $496 million to about $462 million. This is a good sign, as it means they owe less than they did before. Their long-term debt also saw a reduction, which is often a positive indicator for financial stability. Now let's talk about the heart of the operation, the income statement. This tells us if the company is making money or losing it. For the 3 months ending the 30th of September 2025, Semiconductor reported a net loss of over $40 million. That might sound like a lot, but it is actually an improvement compared to the nearly $55 million loss in the same period last year. Looking at the bigger picture, for the first 9 months of 2025, the net loss was just under $119.5 million. Again, this is better than the nearly $110 million loss for the same period in 2024. So, while they are still losing money, the trend is in the right direction, which is always a good thing to see. Revenue for the 3 months ending the 30th of September 2025 was just under $54 million. This is pretty much flat compared to the $54 million in the same period last year. For the 9 months, revenue crept up slightly from about $158.7 million to $159.4 million. It seems like their sales are holding steady, but not exactly booming. Cost of goods sold, which is what it costs them to make their products, actually decreased slightly. That is good. But what is really interesting is their research and development expenses. They dropped from nearly $46 million in the third quarter of 2024 to about $38 million in the same period of 2025. That is a significant cut of almost 17% for the 9 months. R&D spending also fell from over $136 million to under $119 million. This reflects some major restructuring efforts, which they mention led to reduced headcount. While cutting costs is often necessary, we'll have to watch if this impacts their innovation pipeline down the road. Speaking of restructuring, they recorded over $1 million in restructuring costs for the third quarter of 2025, tied to a new plan initiated in May. For the 9 months, these costs jumped to over $8 million. This shows they are actively trying to streamline operations, which is a continuous process for them. Now, for something that is definitely impacting their bottom line, interest expense, for the 3 months ending the 30th of September 2025, it nearly doubled to over $4.3 million, up from about $2.2 million last year. This big jump is largely due to their new 2029 convertible senior notes that they issued in December 24. For the 9 months, interest expense more than doubled too, from $6.4 million to over $13 million. This highlights the increased cost of servicing their debt. Interestingly, for the 9 months, they actually reported a net gain from change in fair value of contingent considerations and acquisition, related holdbacks which boosted their other income. This contrasts with the larger gains they saw in the prior year, likely due to the timing of acquisitions and how their fair values are adjusted. They also reported a gain from extinguishment of debt of over $2.6 million this year, due to repurchasing some of their 2027 notes. A major story here is their planned divestiture of Wuxi, their Chinese subsidiary. This is a really big deal because Wuxi accounted for a significant chunk of their revenue, about 43% in the third quarter of 2025. They've entered into an agreement to sell their entire stake for about $135 million payable in cash. This sale is pending regulatory approvals, and if it goes through, it will significantly change the company's financial picture, removing a large portion of their revenue and assets. They are also in the process of evaluating whether Wuxi's results should be reported as discontinued operations. Looking at cash flow for the first 9 months of 2025, Indie Semiconductor used about $42.8 million in operating activities. This is an improvement from the nearly $52 million they used in the same period of 2024. So effectively, they are burning cash a bit slower. Investing activities show they used about $30.2 million in the first 9 months of 2025, primarily for the recent acquisition of Emotion 3D for about $17.7 million in capital expenditures. This is higher than last year's $16.7 million used in investing. Financing activities are quite telling. For the first 9 months of 2025, they used about $35.9 million, largely due to repurchasing about $30 million of their 2027 notes. On the flip side, the same period in 2024 actually saw them provide cash through financing activities, showing a significant shift in their cash flow strategy. Now, let's peek at their future obligations. They have significant debt obligations coming due, with over $130 million by 2026, and another $218 million plus by 2029. Not to mention the interest payments on all of this. This is a substantial financial runway they need to manage carefully. Of course, no financial report is complete without a look at the risks. They are heavily exposed to macroeconomic conditions, like inflation and interest rates, and the ever-present threat of tariffs. The ongoing conflict in the Middle East also creates global uncertainty. A major new risk factor they've added is related to the pending Wuxi divestiture, highlighting potential disruptions, delays, and the risk that the deal might not go through at all, which could negatively impact their stock price. They also warn that the reporting of Wuxi as discontinued operations could impact their future earnings. So, what is the story here? Indie Semiconductor is in a transitional phase. On one hand, they are showing progress in reducing their net losses and slowing down their cash burn from operations. The R&D cuts and restructuring indicate a focus on efficiency, which is smart. However, their revenue growth is stagnant, and the new debt from the 2029 convertible notes is a considerable financial burden, as seen in the doubled interest expense. The planned divestiture of Wuxi is a bold move. It could free up significant cash and allow them to focus on their core automotive semiconductor business. But it also means losing a substantial portion of their current revenue. The success of this divestiture, along with their ability to generate new product revenue streams, will be key to their future financial health. The risks associated with this divestiture are significant and could cause instability. Overall, Indie Semiconductor is navigating a complex environment with cost, cutting measures, and a major divestiture on the horizon. The market will be watching closely to see if these strategic moves translate into profitable growth and positive cash flow in the coming quarters. Alright, that is our breakdown of Indie Semiconductor Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.